Well, thanks for tuning in to Countdown. My name is Neeraj Shah. Over the next 30 minutes, we'll talk about this precipitous fall that we've seen in the markets. Remember, the last 3 days, I've been talking about this, that it could happen at the end of any given day, and now it's probably happening at the end of today, or as the closing moments of today, when there is hopes of a stimulus coming in, but no murmurs from the powers that matter, and as a result of which this uptick that we saw early morning trade is now getting sold into as well. The bank nifty in particular has just completely collapsed, but I must say the clutch of other names as well which are coming off. It's not just the banking stocks, a lot of other mid-sized names too have come off, and therefore it's not just restricted to banking is what I'm trying to say. The world markets are okay, but the pressure on the Indian markets, let me just quickly mark what's leading this charge lower. So NTPC, Mahindra & Mahindra, Axis, SBI, Maruti are amongst the top losers. Titan continues to grind lower. ITC is now at 158. Day before yesterday it was at 174 when the first set of taxes on the alcohol companies came in, and from 174 to 158 for a very stable stock generally, that's quite a steep gash. Bajaj Finance is down in the red. BPCL is in the red as well. What's holding out? HUL, very strong, 5%. So the block deal done and HUL is doing very well. Reliance Industries is up about 4%. Nestle is about 4% in trade. So there are a handful of 3 or 4 names which are doing okay, but otherwise, fair degree of pressure at the large cap end of the market. Even at the mid cap end of the market, I must say, you are at least at the financial names or otherwise are seeing some serious pressure as well. So Cyient down about 10% post numbers. Laurus Labs had a lot of bulk deals today and about 9.7% lower. RBL Bank 6.5% lower after the numbers, so completely gone off. Opera Realty 5% lower. There is weakness in Prestige Estates 4.5%, BHEL about 4.5%. So all of these stocks have looked very, very mighty wobbly. What is bucking the trend? Hathway, TV18, so that Network 18 group stocks are doing okay. JB Chemicals is up about 5%, and some strength in a EID Parry, which is up about 10% in trade, but few and far in between. We should get our technical experts on board in moments from now as well, but just get in Deepak Shenoy for a quick perspective. Deepak, I think I know your views because you tweeted it out quite vehemently yesterday. Barring a very quick or near announcement of some form of stimulus from the government, do you reckon that the markets would be headed substantially lower?
No, actually the markets are now a slave of liquidity, not fundamentals. If it was fundamentals, it would probably be much lower than where we are. There's a lot of uncertainty, there's a lot of risk, there's a lot of bad things that are going to happen to the economy. The markets themselves are going to be buoyant, relatively buoyant because of the flow of liquidity that seems to be coming in, both from domestic retail, domestic mutual funds and institutions, and perhaps a lack of selling really of foreign institutions. Possibly there will continue to be some selling in financials, but I generally believe, at least looking at markets today, that we've got a lot of liquidity. The 10-year bond yield has now gone below 6%. We're seeing extremely high activity in the debt market compared to 3 weeks ago. Institutions have started to come back in strong. I think foreign activity is also starting there. It will move into equity markets as well. So for a while, I feel equity markets will be divorced from the reality of the economy. So maybe markets continue to be where they are or even go up while the economy continues to weaken, at least for the next 2 months.
Okay, well, not too perturbed. Deepak Shenoy, let's see if the charts are looking slightly weaker though. Gaurav, charts and the derivative positions. Gaurav Bisa is with us. Gaurav, how are you viewing the trade today? This morning everybody was bullish, but we've come off in the second half of trade. How do you see this pull back? Would you buy the weakness or would you sell the weakness?
Good afternoon. If you see Nifty index, we had a breakdown below levels of 9,350, a rising trend line breakdown. And second day, we again had a retest of that, and we again saw pressure coming, and we made a low of 9,100 odd levels. So in my opinion, Nifty is still struggling around levels of 9,340, 350 on the spot side. As long as we are trading below this, I would be cautious. It would be sell on rise till 9,340.50. keep a 60 point stop loss on downside. 9,100, 9,050 is what I would be looking at. For me, I would be bullish only if it trades above levels of 9,340, 350, in which case we can say that once that is sustained, it is now again back in the uptrend. Till the time that does not happen, it will be just like Nifty finding some hurdle at levels of 9,350.
Okay. And are you doing anything on the bank Nifty, Gaurav?
Bank Nifty, as you mentioned in the beginning of the segment, that was one that saw more amount of pressure, and that was the case today also. 20,000 is proving its Achilles heel. We are seeing a lot of writing happening in 20,000 call, even 19,500 started seeing some addition. So structure is exactly the same what we have seen in Nifty. It has also given a breakdown from rising trend line. It has retested those couple of instances around 20,000 mark, and it has again seen pressure. So for me, at the current juncture, I don't see a trade even for a short one. But any jump towards level of 19,900, 19,800 can be sold. Keep a 20,000 stop as a stop loss, and on downside 19,500, 19,200 is what I would be looking at. As long as if you look at the fresh breakdowns would be seen below levels of 19,150. So in my opinion, at the current juncture, this short is not suitable for either long or short. And as far as the bias is concerned, it would be sell on rise for time being.
Okay, yeah. Now you answer my question. It doesn't look good either for a long or a short. So Gaurav is not going to do anything right now on the bank Nifty. So let's talk about specific stocks. You have a buy and a sell call, Gaurav.
I would be a long one looking. We have seen some additions happening in future segment. We have seen a small breakout on point figure charts as well. Stop loss of 818, target of 865. Even in pharma space, even Sun Pharma is looking very interesting. One can even buy that. Keep a stop loss of 10 rupees on the upside. 490 is what I would be looking at. For the short side, Titan is looking weak. Consistent short positions getting built at the high levels from levels of 900. Multiple breakdowns on hourly charts. One can keep a stop loss of around 850 on the downside. 795, 790 is what I would be looking at.
Okay, well, let's talk about some individual businesses and the kind of flows that we're seeing in some of those and the results that we've seen there. Deepak, the move in a HUL and subsequently in a Nestle and some of the others post the HUL block deal seems to suggest that if there is money, the money doesn't mind chasing the expensive staples names because they seem to be the right mix of defense as well as some bit of growth in the current scenario. How are you reading that?
Well, there's no growth. I can tell you that the HUL results itself had a
Relative.
indication. Yes. I mean, relatively, of course, but then you're paying 80 times, 90 times earnings for what exactly? I mean, if you're going to not be able to grow even in a point where the only thing people can buy are the products that you make, chances are that you don't really have a whole scope of growth. So you're actually overpaying. So I think great there's a great concept of trading these stocks. People want to buy them because either they're MNC names or they believe that the products will sell, but they're talking 10%, 12% growth rates at best. Not very fundamentally enthused about these companies. You're only betting on the India story here. You don't get any of the international growth, neither in Nestle nor in Hindustan Unilever. And relatively speaking, even today, a lot of their products are not available simply because they don't have manufacturing, they don't have packaging, they don't have transport. A lot of the other stuff in place, supply chains have been damaged. So while they have good franchises, I don't feel that this is the kind of price you should pay for them. So I would avoid. There's so many others, much cheaper and much faster potential growth stocks that I would rather not go down the route of HUL or Nestle, to be honest.
Okay, so well, Deepak doesn't want to quite pay that premium, and maybe that is justified because you're not getting that kind of growth that you get in a normalized year. So could the valuation multiples come off? Or as some bulls say, that you discount FY21 completely and move on to FY22. But for people who don't want to do that, Deepak, is Telecom fast emerging as that option, or do you think that too has run its course because of this 30-35% uptick that we've seen in the last 1 month alone in both Jio-led Reliance move as well as Bharti Airtel?
So Jio is of course a different beast because it's a part of.
I think we've just we'll get Deepak in just moments from now. Gaurav, can I come to you on that though? I mean, technically the charts may be looking strong, but are we near some bit of resistance levels for either a Reliance Industries or a Bharti Airtel?
See, for Reliance Industries, we just had a consolidation breakout. It has been finding strong resistance at levels of 1500. We have seen even short sellers of 1500 call being trapped. I don't see a toppish pattern being formed over here. 1615 was the previous level from where we saw some hurdle coming in, so that might act as a resistance on a very near-term basis. But I would not be short over here. For Bharti, if you see, there was a very harmonic pattern at levels of 550, and we have seen 3 consecutive instances where it comes to levels of 550, and it has been forming new lows. It made a low of 528, again jumped to 550, then 528, today 526. So in my opinion, that is looking weak, but I would not short it over here. But Bharti is one that again is looking very vulnerable. It can slip towards the low of 485, 490.
Interesting. Deepak, fundamentally, sorry, you were saying that Jio is a different beast. Would you want to dwell on that as well as Bharti too?
So Bharti has been at the same price for 13 years now. It's not broken out of that range for the longest time. So it's not necessarily that it's expensive. It's just that, they've started to see growth now because their competitors have been eliminated. They're able to raise prices. They are perhaps bigger than Jio in terms of broadband today. There is some focus on content, which is through their own, offerings and their own, the joint ventures or connections to other companies doing content. So there is that excites me about that place. I'm a shareholder, so I'm biased, but at this point, their debt, while their debt is a problem, I think debt service ratios will get much better because of falling interest rates, perhaps soon to be reflected in the rates that they pay as well, not just in India but worldwide. They've also started to look at getting rid of some of the baggage on their portfolio. It's early days. We don't know how much they'll be able to actually sell out because it's only recently been listed. But overall, I think there's a lot of scope here. People will move a lot more into data. There'll be data from home. There will be multiple lines. People who want to work from home might actually have 2 lines instead of 1. So as a backup, there will be potentially a lot more activity for them going forward. More data that flows on the pipe. And perhaps a lesser payment to be made for a 5G auction because hardly anybody else will bid. So that is good. Geo-wise, they are a power play at multiple levels. They've got content, they've got data, they've got services on top of it. They've got, from what Geo Platforms is the owner of the Reliance Jio Telecom company, but it also has a bunch of other companies, which include companies that help with online marketing, with data, with content, with there's a Geo Meet that's coming, which is going to be an online collaboration kind of software that allows video conferencing in real time. So we don't know how well that does or how good that will be, but I know that at least they're innovating. They're trying new things. They're trying different things. They're trying real-time translation. There are a bunch of things that are happening, and it's coming with size. And Jio is a beast where Reliance Industries, the parent, has taken on almost all of the debt. Most of the debt has gone away from the Jio. So I expect an IPO in that company separately in the next 2 or 3 years. So the bet there is, I think that, with a low debt requirement, this company will be immensely profitable. And even the valuation they're talking about right now is relatively small compared to anyone of that size in any other Western country. So we have a potentially much higher valuation that can come from that. There's also Reliance Retail in Reliance, which is another big part of the beast. And then they have the oil business, which has been cash flow positive so far, perhaps not so much in this quarter, but it will be perhaps, it will come back to at least some level of normalcy. So I think Reliance also has a lot of scope. The problem really is right now we're charting unknowns. We don't know how much this will scale or move, but I feel that they're going to make revenue. How much of it is profit? We'll have to wait for a couple of quarters to see. But if you gave me that versus a sector that's not likely to grow, I would choose these because the growth potential here is 40-50% a year for the next 2 or 3 years. That's what my feeling is.
Yeah, no, man, I think it's logical. If there is one space right now where you're definitely going to see growth, it's probably telecom, right? It's become almost FMCG of sorts. You go out and recharge your phones, at the end of every month. You pay your bills on time. You don't want the phone to get disconnected in any fashion whatsoever. As is with data streaming, Wi-Fi is probably the next most important thing after a refrigerator, or maybe more than that in a household. So interesting times. But let's try and get in some queries. I think we also get in Pritesh Mehta. Just before that, I want to mark though, SBI cards and payments, the numbers came out. The net revenues were up 21%, but net profit was down about 66% at 84 crores. There was also an impairment loss of 489 crores due to the COVID-19 impact on SBI cards. And that was the interesting thing. Let me just try and see what the stock has doing. It was, as with the case with some of the other companies in the morning, was up and about. Currently, SBI cards 4% lower at 551. RBL too, the cards business seemed a bit broken on the spending front, etc. Though April, I think they said that they've seen a bounce back in the month of May post the April slowdown. But let's wait and watch. This one, certainly looking slightly weak right now. But Pritesh Mehta is with us, as are the queries. So quickly get in 3 or 4 queries going. Maybe a fundamental query as well. But first, Balaji Reddy is asking for a view on Ashok Leyland. Pritesh, thanks for joining in. Do you have a technical view here on Ashok Leyland?
Yes, good afternoon. Now see, last few weeks we had seen some sort of relative outperformance from auto stocks. But today it's a different case altogether. Ashok Leyland, if you look at the standalone chart, is facing a hurdle around 53-54 levels. Thereafter, we have, in fact, in last 1 month, we have seen 4 attempts by this counter to breach that level, but it failed to do so. And we have seen a downside reaction. And now what I believe that, if 46 level is taken out on the futures, then only we can see a move towards 52 levels. So I think from a trader's perspective, 46 is a good pivot point. I think we should wait for this stock to breach that level on the upside.
Okay, Ajay Kumar is asking for a view on Prestige Estates. Pritesh, any thoughts here? Have you looked at the charts of Prestige Estates at all?
Just give me a minute.
Okay, while you hunt for that, Pritesh, can I ask Gaurav Bissa for a chart check on SBI or ITC, Gaurav Bissa? Because I think Krishna Reddy is asking for a view there, and ITC in particular seemed pretty interesting. The last few days has had a bit of a fall.
Well, if you consider ITC, as long as we don't see a very strong move, it doesn't make sense actually. It has been finding some supports at levels of 150, and there's a very strong hurdle at levels of 165, 170. So basically, it's been trading in a range. I would wait for an dip, then only I would buy. It is showing early signs of forming a bullish harmonic pattern. I would not be a buyer here, but yes, if it indeed witnesses some downfall towards say level of 150, then I think probably at those levels one can buy. There is some good buying interest. That is also seen at levels of 150. So you buy at 150, keep a 5 rupee stop loss on the upside. 160, 165 is what I would be looking at. For now, I don't see a very strong trade at this point.
Okay, so not a strong trade, Krishna, on ITC at the current point of time. Pritesh, any thoughts on Prestige Estates?
Now see, back in the month of March, we had a very red tall bar on Prestige Estate. And thereafter, the peak of the tall bar has been very difficult hurdle for the stock. And in fact, thereafter, we have seen multiple attempts and we have seen failures on every occasion. And stock has been sliding lower. Around 161, I think that could be case for more downside. If you look at the GAN numbers, is trading below the confluence of GAN numbers. I'm expecting a move back to 149, 150.
Okay, so that's the other one. And I think there is a fundamental view being asked by Mike Ross for Bharat Electronics. Is it a good idea to accumulate Bharat Electronics from a long-term perspective? Deepak Shinoy, I don't know if PSU is out of your game, but any thoughts on BEL?
It's we used to have it in a portfolio a while back, kind of gave up because of the PSU nature of this game. I think a lot of the contracts that they had have been moved to something where their margins have been kind of reduced. So not very enthusiastic about it, though the price is very good. I would say at some level, this is going to be a very attractive stock, but like to see growth in it earlier. Also, they have a lot of other levers, not necessarily something that they...
I think We just lost Deepak yet again. Blame it on the connectivity, I must say. While Telecom is looking strong, sometimes some of these feeds just freeze for more reasons than one. Okay, one final question and a quick thought. Gaurav Bissa on Asian Paints. Nishant Ibrahim is asking for an outlook on Asian Paints. I'm guessing it's a short-term view. The stock has been beaten down, trying to bounce back, got sold again today. What do the charts indicate, or what do the FNO positions indicate?
A few days back, it had again formed a very harmonic pattern, and from there we have seen around 200 points that has been slipped. Even at these levels, I would be a little bit skeptical because even if you look at daily or the weekly candle, we are still not seeing too much of respite happening. And if you short over here, the support is not going to be in your favor because we've already seen a very strong fall. If somebody wants a very short-term trade and we jump towards the level of 1690, can be used as shorting opportunity, keep a stop loss of 1620, and on the downside levels of 1530, 1520 is what I would be looking at. So it would be a sell on risk candidate still for me, and I would not like to try to pick bottoms for this particular name.
Okay. Well, let's try and get in closing strategies as well from our experts. Pritesh, you want to give in your one top closing strategy today?
Now see, there is one counter which had made a smart move on the upside. Thereafter, it came lower. That's HPCL. Now see, it made a peak around 225 couple of days back. Now that is a GAN number. From that point onwards, on pointed figure charts, we have seen a triangle breakdown, and thereafter we have seen the stock sliding lower. A double bottom sell has been seen. In fact, thereafter the selling pressure has accentuated, and triple bottom sell has also been triggered. So I'm expecting this continuation downtrend, and the target is 178 on downside.
Okay. Gaurav, what about you? Your top closing strategy would be?
One can buy Sun Pharma, keep a stop loss of 462, 460, play for 490, and also Lupin is looking good. So both are looking equally good. One can either buy Lupin because that is also a very strong breakout. Good participation is happening. So either you keep a stop loss of 818, play for 865, and even Sun Pharma is looking good. So in Pharma, these two are looking equally good.
Okay, watch out for Pharma. I must say financials aren't looking good as we said, because look at IndusInd Bank, the intraday fall, and after that 7% uptick yesterday and a 4% uptick today, it's down about 3% in trade. Some of the high-flying stocks are coming off, by the way. Deepak Nitrite yesterday was at 556, today down 4%, and 530. Escorts has corrected about 1.5% to 738. So that too is looking slightly wobbly in trade. And we've already discussed RBL Bank down about 7% in trade. Deepak, one last question before we let you go. And that's on SBI cards. I don't know if you got to see the numbers, and I don't know if you saw the RBL commentary on the cards business too. But at these prices, yes, it is consumer financing focused, but maybe not the same risks or maybe different kind of risks. Do you think the valuations are favorable for somebody to invest into SBI cards?
Well, I haven't seen the price yet, so I should probably refresh my, to see. I stopped tracking it a few back.
It is about 550 odd.
Okay, at 550, I think, obviously it's not. So one of the reasons why SBI card will remain at a certain level is because there's a very small free float in, absolute percentages or in percentages. So there will be some part of it that will kind of get an elevated valuation just because of low supply. But at some point, we have to consider this, that the biggest spends on cards tend to be travel and dining / entertainment, and that is going to hurt for a while. I mean, I don't think travel internationally at least is going to be there for quite some time, and restaurants, in restaurant dining is not going to happen for a while. Within India, travel, hotels, all that stuff is not going to happen for a while. So 3,000 or roughly half of the revenue of SBI cards comes from their transaction charges and fees. So if you take that as under threat, and if that reduces substantially, we're talking of a fairly large contraction in income. And while they may see some NPAs, I'm not going to talk about the NPAs on the credit card front. Assume that NPAs are zero. We're actually seeing a 25% reduction in revenue for the next year, and hopefully after that it starts to get better. So I think for now, I just wait for clarity on how this whole thing emerges going forward. and only then kind of take a position on the stock. And plus, I haven't seen the numbers, so I don't know how badly they've been hit or what their commentary is on for the next quarter. So at this point, I'll just put a, there again, like I said, if I'm looking at a recovery, there are other sectors that will recover earlier and possibly have much higher growth than a credit card business. So would rather look at those. Then I like the SBI card story. It's just that I don't think it's the right timing to get in.
Okay, Deepak, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, that's the view from Deepak Shenoy. Likes the SBI card story, but the timing may not necessarily be the best. Okay, quick thoughts on some liquid names. HDFC Bank is at 930, 931. In line with the Bank Nifty, 2 has come off. Gaurav, the more resilient financial name, the last 1 week and 1 month hasn't done too much. Is there a trade here?
Actually, no. If you see, even for the hourly charts, because on daily we are not seeing anything. If you try to see on the hourly charts also, even then also we are seeing just contraction happening. It's neither giving a breakdown or it's giving a move. So it's either go above levels of 950, you buy above levels of 950, keep a stop loss of 935, you play for 918,000 levels, or you play for a breakdown. The breakdown will be below levels of 910. So below 910, you keep a stop loss of 930 and you play for 850. Right now, it's just trading in a range and there's no trade actually. If you see the daily chart, you'll just see that there's just one candle after this, but you're not seeing any wide range bodies being formed.
Okay, Pritesh, the other HDFC name which is doing very well today is HDFC Life. Any thoughts here?
Now, see, if you look at the performance, recent performance of HDFC Life, there is not much to to go about, because the stock has we have seen the stock being facing resistance around 520 odd levels. Now this is the first occasion after a long time that stock is showing some sort of attempt of trying to sustain about the same. Still, it's an early road for it, because we have seen the continuation pattern which is lacking in this counter. So I would wait for the stock to go above 530 before initiating any trade, because there is also marked around GAN number of 529. So I think we need to wait before going into the counter.
Okay. Okay. Viewers, mind you, I think what is also looking very strong are some of these other FMCG names. Nestle India is up 4%. Britannia is up about 3% as well. Maybe, just maybe, some of the foods FMCG business, pure play food companies, might actually not do all that bad compared to what HUL did, because HUL had the other business as well, the beauty and home care segment, which actually showed a dip. The foods business didn't do as badly for HUL as well. Remember that. But let's start wrapping up the markets. A few highlights before I get to okay, let's first talk about the index. Then I'll get to the highlights like the likes of Scient, etc. So the index has cooled off appreciably from the highs of the day. Let's wait and watch what happens during the course of the next few. But what is doing well even now is HUL, up about 4%. Nestle about 3.5%. Reliance is off the highs of the day, but still up about 3.5% higher in trade. Then the pharma packs, Sun Pharma, Dr. Reddy's, both of them have done exceptionally well. And adding to the exporters list is the likes of Tech Mahindra, which is doing well. Z, watch out, very interesting there. I mean, I'll probably ask for a chart check on Z Entertainment to Gaurav Bisa. Don't normally talk about this, but I think it's closing at a very sharp note. So do watch out for this one as well. Kotak Bank, about a couple of percentage points, and Adani Ports, marginally higher in trade. What's not done well? NTPC down about 4%, SBI 166 now, Power Grid, Indian Oil, BPCL, ITC, that entire list has looked weak. Scient, from the broader end of the spectrum, has looked wobbly, 10% lower. There is weakness in Deepak Nitrite. I'm pointing this out because it's usually a very strong stock, but down about 3.5 or 4%. There is weakness in SBI cards, post the numbers, about 3% or more, 3.7%. RBL Bank post numbers down about 7%. M&M Financial down about 3.5%. So all of those are looking slightly weak. Varun Beverages is up, Tata Consumer is up. So some of the mid-sized consumer names are not doing all that poorly in the session today. So you have to bear that in mind. Just one final list of some of the small caps and see what they have done before I ask our experts for their final thoughts. Laurus Labs has corrected 10% because of those block deals. There is weakness in Healthcare Global, down about 6%. Raymond is down about 5%. Mahindra CI is down about 5%. Aptec down about 5%. So what is doing well? Shanti Gears up about 10%. EID Parry is up about 10%. There is weakness. There is strength in Balaji, Zealand, Hathway, TB18. Media is doing okay today. Gujarat Gas is doing okay, about 5% higher. And I think Edelweiss from the slightly more liquid space is doing okay as well for itself. So do watch out for that stock. But that's few and far in between. We largely have more weakness on the financial side. Actually, Gaurav, we've already got in an index view. I want a stock specific from you on a large cap name, and then I'll get Pritesh to talk about the index. We've been talking about upstream oil, Gaurav, the last few days and how the oil and gas names have done. Can you give me a view on one, ONGC? It's actually recovered a bit and ending in the positive, and a view on Z Limited, excuse me, because its media as a pack is doing well, and Z Limited has just ended marginally higher in the last half an hour or last 1 hour.
Well, if you talk about ONGC, this is what we had discussed a few days back also in the morning show, and I told you that it's having a rounding top formation happening, and even you can say that there's a very strong level of 81, 82, and you've seen the stock reversing exactly from those areas. I would still be skeptical. The trend is still not looking good. There is a support at levels of immediate support levels of 73. So if that sustains, we can have a bounce back. But then this is not the stock that I would like to play for the bounce back. There are much better high beta names that I would rather play for a bounce back than something like ONGC. For anybody who wants to buy ONGC, buy only above levels of 82, in which case you can keep a stop loss of 79, 80, and on the upside you can play for targets of 90. So till the time it does not cross 82, it's an avoid for me. As far as Z Limited is concerned, again, you might have seen an intraday uptick, but if you see the candle at the end of the day, there's nothing much interesting about it. And what we discussed about HDFC Bank is showing similar pattern where we have seen small bodies being formed, candles being formed, one after the other. So there is a support at levels of 130 or 140, but that is just about it. I don't see a positive as yet. And there will be a small breakout from a front-run breakout above levels of 158. In which case one can keep a stop loss of 152, 153 and play for targets of 170. So for me, both are avoid as of now.
Both are avoid as of now. Pritesh, what about the indices? Do you reckon that we could head lower from where we are right now?
Now see, if we just summarize today's trade, it has left a bitter sweet taste in my mouth. In fact, I'm sure for every market participant. Because when we opened for trade, everything was in favor of bulls. There was strength in global markets. There was strength in banks in the first half, but things have changed in last 2 hours. Nifty has not been able to sustain above midpoint of Gann China, that is around 9350. Banks have been the major culprit today. Autos have been the major losers. So I think we have something like HU and Reliance holding the markets higher and nothing much else to talk about. So this is not a kind of scenario which, this kind of scenario which we get excited about because it is lacking the breadth participation. And once 9350 is taken on the upside, then only we can see breadth improving. Then only we can see banks coming back in the market. But till that time, I think 9400 and 9100, that is the range which market is going to play out. Nothing more to talk about in that.
Okay, a range-bound market. Thanks so much for joining in today, both of you, Gaurav Bisa as well as Pritesh, and giving us your thoughts. Really appreciate your time. Okay, so that's the technical view. Now, before we wrap up the show, a special voice to talk about the flows, dissect them, Mr. N.S. Venkatesh of Amphi Johnson right now. Well, gross flows have halved month-on-month and down 17% in year-on-year. Mr. Venkatesh, how have you read into this? Equity flows at least.
No, essentially, if you look at it, the equity flows over the last 2 months has shown some improvements, I would say, into the mutual fund schemes. The net flows were around 11,000 crore in March, and now it's at around 6,300 crores. So I would say that, yes, the people are looking at the markets closely. They are reassessing their risk appetites, and then they will start moving in. At this particular point of time, I believe that they are waiting for the quarterly earnings results to be out. And once the first quarter results are over, then maybe they will again come back in good numbers.
Mr. Venkatesh, sorry, excuse me if I'm wrong, but the net flows at about 6,200 crores, right? on a
Yeah.
YOY basis are up 35%, but on a month-on-month basis would still be down about 47%, right?
I agree. That is because March was an extraordinary period where money had flown in. Then markets were not it was volatile, so people were reassessing their strategies.
The numbers seem to also suggest, Mr. Venkatesh, that large and mid-cap fund inflow on a month-on-month basis, again, maybe due to the larger base of the month of March, are down about 60% and multi-cap is probably the best performed at 45, but the small-cap fund inflow is corrected quite steeply. Do you reckon, is there a behavior change wherein people are who are preferring the equity flows, are preferring the multi-cap and the large-cap category for the time being?
I think so. I think that essentially they are going in for the large cap fund and the multi-cap fund, especially the large cap fund, for the simple reason they believe that those stocks are more liquid and it gets traded quite often. So to that much extent, they believe that the large cap funds will, those corporates have an underlying strength to go through this COVID-19 period. So that's why I think they are showing that preference there.
The biggest newsmaker, though, Mr. Venkatesh, and you obviously have to, no price for guessing, is the kind of flows that we've seen, the outflows in the credit risk category, isn't it? Now, how does the sentiment get repaired out here? Because this 19,000 crore number is also not a small number at all.
No, that was essentially one of instance where Franklin Templeton had wound down some 6 schemes. So that had a domino effect onto the other schemes as well. But fortunately, the regulators stepped in timely fashion. RBI came up with their special liquidity facility. So that boosted the confidence in the markets for the investors. And after that, the redemptions have fallen down substantially. But having said that, except for that one fund, all other funds manage the redemption so smoothly. I think they had enough liquid securities within their portfolio.
No, Mr. Venkatesh, please don't get me wrong. I'm not saying that other funds have issues, not at all. I mean, we've spoken to a bunch of other houses and they have done exceptionally well. My question is, this confidence crisis now, do you reckon that has also been arrested? Have the daily outflows from credit risk funds, say in the first few days of May or the last few days of
It has come down. See, if we look at the number on Monday when RBI came out with that announcement, it was around 4,900 crores. But after that, it started falling down, and last Thursday it was somewhere around 700 crores. So even this Monday, Tuesday, it has fallen down substantially. So I think the confidence has come back into the markets. The investors are understanding what exactly has happened. So they are reassessing their thing. Normal redemptions are happening, no extraordinary redemptions.
Okay, let's wait and see how the month of May turns up. Mr. Venkatesh, my only worry was that the equity inflows have taken a beating in the month of April of sorts, month on month, despite equities doing well. Would that augur poorly for the month of May?
No, I believe that we cannot take it as a trend. I would believe that we will, going forward, you will see the equity inflows into the mutual fund will bounce back much more smartly.
Okay. Let's wait and watch and cross fingers for that. Thanks so much, Mr. Venkatesh. I appreciate you taking time out and speaking to us.
Thanks.
Well, viewers, remember, you probably get more if you indeed buy at the current times. And typically, history has suggested that if you look at SIP returns, buying during times of crisis actually has given you more returns. Though you never know, there is always a first time. There could be an extended period of slowdown for equity markets, and that might all disturb as well. So you never know. But let's wait and watch how it turns out. Though I must thank all of you for joining in today. I must also leave you with a quick programming note. At 4 o'clock today across all our platforms, we'll have Shankar Sharma and Devina Mehra from First Global Live to talk about how they are approaching the current investing climate. They invest globally as well as locally. It might be interesting to figure out how does India stack up in the current scenario? How do equities stack up versus other asset classes? So do try and log in for that at 4 p.m. across all our social media platforms, YouTube, Twitter, Facebook, and our own website. Thanks so much for watching.